Hey everybody, Chuck Barone. It is Thursday, November the 30th, 2023. Bye-bye, November. Time now to start thinking about Santa. December here, end of the year, all the fun stuff that comes with it. A crazy market today. Did you guys see any of this stuff? Wow. Anyway, before I get rambling on, let me take a half a second. Welcome everybody to the show. And as always, thank you guys for your support, man. You guys being here and what you do for us means the world, man. We thank you. All right, so let's have a look at these markets today, right? So it appears that the bond and stock market now are convinced that this rate hike cycle is over, that this inflation fight is won, that everything is going to continue to go perfectly, and it's time for rate cuts. So, the market reacting as you would think it would, although not quite. Let's talk about this, okay? So the Dow Jones today was up all day, nothing like it finishing up 520 points for the high of the year so far, 35,950 on the Dow. The S&P rally is a nice rally for the S&P, up 17 points. That's a pretty big move for that broader market index, sitting at 4,567. But the NASDAQ, either they didn't get the invite to the party or they didn't feel like it. NASDAQ falls 32, sitting at 14,226. Now I tell you, the NASDAQ is probably the most debt-reliant sector of the stock market. A lot of more speculative tech, biotech companies. So you would think that they would be even more sensitive to this rate hike certainty, but apparently not. So you see that, the market's now factoring in basically a 100% chance the Fed's going to start rate cuts next year. So the market's happy. But here's the weird thing, guys, right? Okay, so now look at this bond market, right? So stocks, okay, you would expect the Dow to be up if it actually is true that this rate hike cycle is over. But look at the bond market. The 10-year today, does it fall? No. Up 8 basis points, 4.35%. The 2-year, does it fall? No. Up 4 basis points, 4.69%. Now, don't get me wrong, these numbers are still pretty low compared to where they've been. But if rate cuts were a certainty, wouldn't the bond market kind of react with a little bit of a rally? Wouldn't people want to be buying these bonds at these yields knowing that rate cuts are coming? That's where you get your capital gains in the bond market, right? You own a 4.5% bond, and the rates are now 3.5%. That bond is worth big premium bucks if it doesn't get called. But so you would think the bond market would have reacted a little more positively today. It did not. Strange, right? The dollar today, now you would think with no more rate hikes, rates about to be cut, you would think the dollar would be falling. Nope. Dollar rally is up today. Pretty nice rally, actually. Back up well above 103, 103.49. So basically 103.5 on the index. That's a full point move pretty much over the last day or two. You would think the dollar would be coming down if rate cuts were coming. So the market, the Dow Jones obviously buying this, S&P, but it doesn't seem like the rest of the market joining the party so much. Metals today, weird day for gold and silver too. Gold, which had been really rolling, falling today $7.10, sitting at $2,035.70 for an ounce of gold. Silver rallies up 26 cents, $25.26 for an ounce of silver. Stronger dollar, you would think silver would have came down today. I still really believe that silver is going to be the hot one sooner or later, just because it's so inexpensive to get in. And if you want to get into gold, you got to spend some money. You can, $100 can buy you some silver. So I think before long, when Joe Sixpack, the Schmuckatellis, and everybody else out there starts to realize metals are where to be, you're going to see a pretty nice rally in silver. Oil today, well, I've been telling you guys, here it comes. down $2.25, $75.61 for a barrel of West Texas Intermediate. I've been telling you guys, man, it seems to me from what I've been seeing, oil wants to trade between 70 and 75. No matter what OPEC, Russia, or anybody else does, it just seems where the market wants to be. More cuts today, talking about OPEC and Russia and all their friends, going to have to cut another 1 million barrels a day of production. Well, you would think that would rally oil, but guess what? It did not. And I'm telling you, I think oil still comes down a little bit further from here into that trough where it stays for a while. Bitcoin today basically flat, down just pennies, 37,786 for Bitcoin, a good strong number. Bitcoin still holding up in spite of all the news about crypto. It appears that Bitcoin is actually here to stay, guys. And it might be time to start taking this seriously, to have get a little bit better knowledge of what it is and how it works. You got some real experts on Wall Street, including Warren Buffett and the recently deceased Charlie Munger, basically bashing any kind of crypto. But at the same time, prices keep spiking, right? So somebody's buying it. Anyway, interesting stuff in these markets today. As always, you don't know what the hell to make of this stuff. I mean, you would think there'd be a big celebration. 100% certainty in the market, rate cuts coming. Nope, didn't happen. All right, so let's talk about the data everybody was celebrating today. PCE, the personal consumption expenditures, the Fed's preferred rate or inflation gauge. Well, everybody's saying it's time to celebrate. Yay, inflation coming down. PCE coming in, 3% top line. That's right where it was last year. Core, 3.5%, down from 3.7. So you're going to tell me 3.5% core rate is a reason to celebrate? Well, I guess if you're comparing it with 9, 8, 5, whatever, okay. You're comparing it with 2, not so much. Not so much, or less than 2 even. I think that, this number shows a little bit of progress, okay? But inflation's still here, guys. And they want us to focus on these silly numbers here, right? 3.5%. These numbers don't mean anything. Later on in the show, we're going to translate that into real dollars and cents, right? So core and top line both rising 0.2% for the month. Personal income and spending reports also coming out, both rising by the same 0.2%. Time for the spin cycle, guys. Here comes all of this stuff now, somehow or another, great news. Well, I tell you this. Consumers have been making a little more money, but it's not enough to keep up with inflation where it is and where it's going to continue to go. So nobody happy. The politicians and the people on Wall Street want to keep trying to convince us against it's like, they come out with, heard the old cliche, right? Who are you going to believe, me or your lying eyes? That's kind of where we are here, because they're trying to just, okay, kiss this frog, you're going to like it mentality. It's all bullshit, man. This fight is not over. And I'm telling you, any kind of surprise, any kind of upset, any kind of glitch in what their plans are could send the whole thing spiraling the other way. Crazy, crazy, crazy times. This we want this, therefore it must be kind of mentality. Well, Wall Street doesn't really work that way, guys. So we got to see this. But 3.5 core inflation, in my estimation at least, nothing to celebrate, man. Okay? Jobs. Here comes jobs. 218,000 versus 220,000 expected. We had 211,000 last week, so creeping up a little bit, but been all over the place. Still a very strong number, even though they're going to spin it as, look, more people are filing for unemployment, the jobs market is cooling. I told you guys, you want to see a cooling jobs market? You get that number up to 285. Okay, you'll get my attention. 218? Not scary at all. The jobs market is still pretty strong. So They want to spin it now into something positive. Okay, I get that. In spite of all their spin, okay, the expectations from the market are we will not hit our 2% inflation target until into 2025. So basically they're telling us we're going to have elevated inflation the entire year next year in a little piece of this report of all good news. How's that good? How do rate cuts affect those numbers? You don't think that if inflation's a little bit higher than it should be, and they start cutting, and the economy is a little better than it should be, and they start cutting rates, you don't see a spike in inflation coming, really? You don't think when rates come down and the housing market blasts off, because it's going to, there's tons of pent-up demand. You don't think that's going to affect these inflation numbers? Man, guys, I've been around a while, and I've seen a lot of stuff. This is top of the line, hokum bullshit, man. All right, so here's the deal. Listen to this. A new survey came out today. This was really interesting. Basically showing the true cost of inflation in dollars and cents. We've been hearing 3%, 8%, all these different numbers every month. We've been seeing prices at the grocery store, the gas pump, and everywhere else friggin' crazy, right? Well, here that now they finally put pencil to paper. $15,000 per year more just to live exactly the same as you did in 2021. So right before the pandemic, before inflation started spiking, if you were getting by on $50,000 a year, well, now you need $65,000 a year just to do the same exact thing. Okay, so imagine reliving 2021 all over again, or even before, let's say 2020, before the pandemic and inflation came. Let's imagine 50,000 then. Now, every day, the same routine. I bought this, I filled my tank, I went to Costco, I paid bills, taxes, whatever. The same routine was 50,000 just a couple of years ago. Now it costs 65,000. So when you see these numbers, hey, look, guys, inflation's coming down. It's only 3.5%. Yeah? Well, guess what? That doesn't mean jack to working people. It doesn't mean jack to people who work hard for a paycheck. Okay? What, 15,000 a year more to live exactly the same. And I was reading this article, the guy was saying America's going to downsize in a big way. The new normal is going to be smaller houses, cheaper cars, cheaper clothes, cheaper, crummier, crappier. It's just freaking horrible anyway. I was always a little bit skeptical of these one-size-fits-all numbers, right? 15,000 more. Now, it does vary, okay? From state to state. Like if you're in a low expense state, Maine, Oklahoma, some other states, it's about 9,000 a year more. Some expensive places, California, DC, 17,000 more. The average 15,000, right? Now to really break it down, like a mortgage guy would do, that's about $1,200 a month more. If you're making $4,000 whatever dollars a month, if you need $15,000 more, it's about $1,200 a month just to break even, guys. Now, I ask you, how many of you guys are making $15,000 a year more today than you were in January 2021? I'm going to guess that number. I'm sure some of you guys are. Anybody in real estate and mortgage, probably not, however. But some people are doing better. But are you doing $15,000 a year better? That's 30% from 50,000, right? 20% from the median income of 71,000, right? Guys, this is why everybody's so freaking angry. This is why everybody doesn't believe these numbers, because they're seeing it with their paycheck, they're seeing it with their pocketbooks, right? Now tell me, how many of you believe prices are going to go down? Are going to come ever back down to where they were in 2021? Anybody believe that? Because I'm telling you right now, it's never going to happen. No way. Corporations won't allow that. Why would they lower prices unless they're dramatically losing market share, right? So market's now pricing in a 100% certainty. The first rate cut next year comes in May, with a total of a full point taken off the Fed funds rate. Really? How will that help these inflation numbers? Anyway, guys, I ramble on, I ramble. Let me just finish it here. Be back tomorrow to wrap the week up. As always, we appreciate your support. If you could, please hit the like button. It changes the algorithms around a little bit, gets our video in front of a few more people. We appreciate those extra views. And as always, guys, we'll be here tomorrow to wrap this week up and bring you the news you need. Until then, take care. Thanks.